Dear trading friends, today we won't be going through a Bitcoin analysis nor an Ethereum analysis or any altcoins. I want to show you my strategy with CoinM trading, how I will increase the number of coins I didn't sell during the bull market since I only sold a part of them by taking advantage of the upcoming bottom. Because it would be a real shame if I just let them sit there and waited for another price increase, when I could actually use this opportunity to grow them. So let's go through CoinM. I keep getting asked in live streams and videos, hey, what exactly are CoinM trades? How does it work? And actually, it's a simple difference. Instead of using US Tether, we can use Ethereum or the cryptocurrency itself to open a position. For example, here we have an Ethereum position of mine. Here we have a Bitcoin position. We also have Solana and XRP, and these are all long positions where I have put the coin itself in, meaning the actual cryptocurrency is used in them. The advantage is that I actually generate the cryptocurrency itself as profit here. Here we have a small portion because with this position that I went long on, I reduced it and then entered again. When reducing the position, you can see that I now have a realized profit of 0.03 Ethereum. And these Ethereum have already been set aside, and if the price of Ethereum rises again, say back to $4,000 or $5,000, then of course these will also become more valuable. And that's where I get a kind of compound interest effect. But there is one important point to keep in mind, and that's liquidation. There's actually a difference compared to US Tether, because with regular US Tether trades, where I use and generate US Tether, I have a lower liquidation price than with CoinM. It actually gets cut in half, and that's important to know. And we'll look at all of this using a calculator. I'll show you the perfect calculator and where you can find it. Of course, we'll also look at what happens if I have a 100% price increase. How much profit does my 1x leverage position make then? That's what I want to go through with you. I can easily calculate that with my open position. But before we get to the profits, because I actually made a small mistake in my thinking about this in the past, let's take a look at liquidations, which are so important. Here's a small example. If we go long on US Tether with X leverage, and I've made a small example here with Ethereum. If I use 10,000 US Tether with an entry price of $2,000, I simply don't have a liquidation price. Trading with 1x leverage using US Tether is not something you usually do because it's basically the same as buying spot. But just so you see, there is no liquidation price. It's a completely different story though when I include CoinM margin. What does it mean if I use Ethereum itself as margin? And I've already prepared that here as well, 1x leverage. If I use one Ethereum and have an entry price of $2,000, I'll click on calculate again here, then you'll see that my liquidation price is almost 50% below. Why is that? Why don't I have 100% here like with US Tether, where I could say the market could actually go to zero? Why do I have 50% here, or rather just under 50%? It's not exactly precise. That's because we also have to take into account that, for example, if Ethereum is at $2,000 and its value drops, the coin's value decreases, and at the same time, and I want to show you how this looks on the exchanges, the liquidation price gradually rises. And you shouldn't let yourself be misled by that. For example, if you open a CoinM position on Bitget or another exchange, it might say here that you have no liquidation price. You can also see here, the estimated liquidation price for Ethereum is currently at $46. But it fluctuates constantly along with Ethereum's price movements. The more Ethereum falls, the more this also increases. So don't let yourself get confused if I say, for example, I'm going long on Ethereum here and it currently shows me a liquidation price of $41. That's not accurate, it's just calculated step by step. Accordingly, if you use Femex and go in there and use the calculator, you'll actually see the correct liquidation price. We can also take a look. If I do all of this with 2x leverage, the liquidation price immediately increases to $1,340. And you really have to be very careful here, because even if I now switch to 2x leverage, you'll see that I have exactly the same liquidation price as I did with 1x leverage. This means overall the liquidation prices for CoinM are about half of what they are for US Tether, and that's something you need to pay attention to. And you absolutely have to factor in this risk. Because let's assume we use the example I mentioned and I'm just below $1,000, then I would be facing liquidation in that case. That would be roughly here. So I definitely need to protect myself with CoinM because I can't just say, okay, I'm using low leverage so I can't get liquidated. Don't forget our record crash. Events like that have happened repeatedly in the past, causing these kinds of liquidation crashes. And if your position gets liquidated, then your HODL coins are gone too, and that's something we definitely don't want. So here's the approach I take. For example, I currently have a position. I know my liquidation price, which is roughly here, and accordingly I protect myself with new positions just before liquidation. I know I'm at about 1,050 and I have around 11 Ethereum in it. I would have to set a limit order where I say, okay, Between 1120 and 1150, since I want to protect myself a bit better against liquidation, I naturally have to add another safety position. And now we've reached the point where I say, okay, we don't know. Especially with altcoins, I want to pass this advice on to you because altcoins are completely volatile. Don't forget that. Solana still has a lot of room to fall. XRP also still has a lot of room to fall, so maybe it's worth being a bit patient, but for those who want to start building already, you definitely need to hedge yourself at possible levels, and that's why it's super interesting if you say, for example, you have a calculator on Bitget, and use this calculator for yourself to display your average purchase price so you can factor in the next liquidation as well. For that, I go into the calculator. I'll show you how. Because now I know my first entry price and I say, okay, I'm in at $2,000 and have entered 11 Ethereum here. And I can add another position where I say, okay, at $1,150, I would add another 11 Ethereum. And now I can do the following. I click on calculate and I know that after this position, my average entry price will be around $1,577. Now I have to take this value to secure myself once again because we don't want to lose these coins. And that's also why I'm making this tutorial today in case any of you are interested. You get this complete protection from me because if you just go long and let it run, those HODL portfolio coins can disappear very quickly. And then maybe the price goes up and you end up with fewer coins than before. That shouldn't be the reason why we're doing this. No, it's more about making sure we're fully protected. It's less about the position itself, but about being perfectly secured. And now I take the entry price of $1,577, continue everything with an X leverage, and I know my new entry price. This could then be 22 Ethereum. But not much is really happening here. I have the $1,577, and I know my new liquidation price is just under $800. This means if I see that the price continues to drop and goes towards $1,200 or $1,300 or so, then I know, okay, now I have my new average entry price and I need to hedge myself again at around $850. That's how I would do it, so that I have some room to maneuver. So that I can go in and know that at $850, my next limit order will be placed with the remaining coins I still have. And this might not be as big of an issue with Bitcoin and Ethereum, but that's the approach you need to take here. Especially, and this is super important, when you're dealing with altcoins. We don't know if we keep going down, and in my opinion, we will fall even further. Bitcoin and Ethereum are also showing this. You know my videos, level 2 data, liquidation heat map. It still looks like a lot of orders below us are going to be filled, and we don't know how far Solana will fall, how far XRP will fall, or how far Doge might still drop. And especially with coins like Doge, that's 50%. That's a very, very, very fast move that can easily get triggered, and it doesn't take much for that to happen. Take a look at this crash here, at what happened here. If you went long somewhere here because you thought, okay, this looked good here, then it went down with the 1 times leverage that was here, and you just had a 70% drawdown, and your Doge coins would have been gone. And that's what I mean about why you need to protect yourself here, especially when you're doing this with altcoins. Now let's move on to the part about profits. How much profit do you actually make? I made a miscalculation there. So sorry about that. If I now say I enter at $2,000 and Ethereum goes up by 100%, I was under the impression that I would get 100% of my position here. No, that's a linear increase, and I want to show you now how I have a perfect understanding of this. Because with my currently open position, I can already set a take profit order. And if I go in here and say, okay, my entry is at 2,033 and I set my take profit at 4,066, then in this case, that would be 50% profit for me. That means it doesn't increase in the same way as a US Tether position. Instead, you only get half the return on investment back when using an X leverage. This means if it now rises by 100%, I have 5.7 more Ethereum than before, so 5.7 Ethereum as profit. But we must not forget, this profit is not calculated from my entry price, which was at 2,033. These 5.74 Ethereum will later also be worth $4,066. And that's actually the big secret with CoinM, why you can achieve extremely good profits here with coins you already hold in your portfolio or with new ones you buy, if you also want to increase them so that in the end you have more crypto. But also, when we reach the top again, you can sell them there as profit with this compound interest effect. And of course, that's really, really awesome. I would also say, okay, if we keep going up, there are many ways to scale this step by step. But I'll show you that if you follow my channel, so feel free to subscribe and leave a like. I recently put out a video that was really well received. Many thanks as well for your feedback on the bear market bottom signal that's coming in here. Also the last one, the whales who placed the orders. But of course, I'll show you how I'll gradually scale my open positions. That means increasing leverage, taking out margin, and then doubling my position so that I can continue later with 2 times leverage and then with 3 times leverage. And for that, I'm waiting for various Fibonacci levels, just like we had here. Rise, correction, double the position, and then another rise. And that way you can end up pulling out a lot more profit. This is really just the low leverage version that I've shown you here and what you need to pay attention to. Because don't forget, even if you say you're only using 3 times leverage here and you're entering at a price of $2,000, 3 times leverage sounds like very little for a trading position, but with a $2,000 entry on coin margin, you'll be liquidated at $1,508. You shouldn't forget that, and it's not that far away. That's 25% below the current price, which is a drop Ethereum can make. So start with low leverage in order to maximize your profits later on. I hope you understood that. If not, feel free to leave any questions in the comments. I also wanted to include this in a video so you can see in detail how I handle things and what my approach is. And I'll continue to do this. If we go up a bit, I'll reduce the position and then buy back in lower to decrease my entry price. Because I really see the bottom coming soon, it's not going to be much further away. I expect a multi-month consolidation phase with a few wicks. But for me, this is currently an accumulation phase and a low leverage position phase for the trades I'm building. Thank you for watching. See you